everybody. Let me turn off the echo. There we go. That should do it. Okay. It's Red Ben Trader, or Red Ben. It is Tuesday night, June 6th, 2023. It's late. It's already Wednesday on the East Coast, but I have been doing a study session because I made some mistakes today. And whenever that happens, where I trade poorly enough to get frustrated, feeling like you just have to like restart some of your plan, like reset a little bit. It's a really good idea to go back and say like, what's definitely working? What could I do on a random day within the last, I don't know, month or two, like in this regime? What would have worked? And could I identify that in the future? And is there anything that maybe I already, like setups that I already know that maybe I haven't really thought about much or like forgot about, but would work if I returned them? Because the truth is, I have a very large file of trade setups thanks to the algo and my coach Simon. And if you want to learn more about the algo or about the futures trading room that Simon runs, you can email him. His email is trade, the letter N, the word perform, at gmail.com. You might even be able to get a free pass to sit in the trading room for a couple days if you mention that I recommended you. There's only we're not a big room, so he only accepts a couple traders like every month to slowly onboard. If someone leaves, there's always the chance that there could be an opening, so it's still a good idea to contact him. But usually when there's a new month coming up like this, he kind of reevaluates like how everyone's doing in the room and kind of decides like consensus wise whether or not it's a good time to like open up to new traders, because he really does want to help, but he doesn't want to hinder traders who are like newer in the room but have been participating by like growing too fast. And there is a cost associated with the room and the algo, so just be aware of that. You can ask Simon about details on all that. You can always follow me on Twitter at RedBenTrader. I share a lot of stuff for free. And then you can get on my Discord through Twitter as well. Really, the Discord isn't anything special. It's just like a message board that I use. I post like my levels every week, and it gives people a chance to kind of like share ideas and stuff. But it's not like I'm actually sharing live trades or anything in there. But you might be able to meet other traders, and then there's no cost for the Discord. So anyway, yeah, after doing some research, which I'm gonna review here, I figured out that there are some. First of all, I think I stumbled on two new ideas, things that I've kind of been watching, but like I'm starting to see how they work now. But I haven't thoroughly reviewed if they always work like this, if that makes sense. I mean, obviously nothing always works, but it's very possible that these new ideas, the new setups that I'm finding, are specific to like balance days, let's say, and we might need to go find some like trend down days and see what would happen if you did the exact same trade setup over and over again on that day. Would you survive or not? That's like kind of the question always whenever you're doing like manual back testing like this. And that's something I have not done, because I literally just found two ideas like in the last couple hours. But as I usually do, when I find something new, I like to post it primarily so that I can review it and I don't forget. Because the other thing, like I said, that I want to do is there is an old setup that is actually working really well right now that I haven't I haven't been using, primarily because it's been so slow. And so we have to remember that markets are fractal, meaning that if you can find a theory that tends to work on, like, here, I'll show you. Like, if you can find something that sets up, let's see here, I'll show you something real simple. Okay. So this, get rid of all the unneeded things. We don't even need all the levels, honestly. Let's just get rid of those for a second. Okay, so if we were to look at a 30-minute chart, right, a candlestick chart, what you're going to find, and this will even work on a 15-minute if you want. It just depends on how much range there is and how much risk you want to take, really. If I use the swing highs and swing lows of previous candles as locations for future trade setups, they're not going to trigger me into trades. But if I limit myself to only looking for trade setups in the locations where the market has previously pivoted, if you will, it's going to improve my win rate. So, and you can see this on a candlestick chart. So, for instance, let's say we were trading today, here, right, Tuesday, and you had yesterday, right, the regular trading hours were in here, and we opened below the close of yesterday's trading hours. But then we overnight traded in the range of yesterday and then opened near the lows and tested below them, right? So if I just said, I don't know what's going to happen today, because that's always the case, right? So let's say it's right here. We're about to open right here. Okay, let me try to make this as big as I can without losing the concept. So let's say all I have is the 15-minute chart, the candlestick charts. If that's the case, I'm probably not trading leveraged futures, to be completely honest. I personally would not trade a leveraged product like NQ with a 15-minute chart. I need something more than that to be more precise. Something like the algo, which can work on smaller time frames very well with the Renko charts. You could also use a smaller time frame, like the 3-minute, for instance. But you're gonna also need to use the DOM, and you're gonna need to use the footprint and manage order flow, right? But let's say I didn't know how to do any of that, and all I'm doing is just trying to decide, where do I want to buy QQQ calls or QQQ puts? Which direction do I want to trade, and where do I want to trade it? And then I want to hold for no less than 15 minutes, and I expect to risk, I'm going to size my trade to risk approximately the average, or let's say the biggest 15-minute candle would be like the biggest possible risk, right? So if I look at the previous day, and obviously this is just, I'm just shooting from, like, I'm not saying, this is not how I trade. I'm making up a strategy because you need these metrics figured out, but I'm not saying this works. I'm just saying, as an example, let's imagine this is all you have. Because what you're going to see is it actually most likely will work. So we can look at this and we can say on Monday, and if you want to maybe do the last, like, I don't know, 2-3 days just to be safe, you could say, okay, over the last, let's say 3 days, over the last 3 regular trading days, what's the biggest 15-minute candle we had range-wise? And I'd say it's this red candle here on Friday at 9:45. That candle, the high really the swing high was up here at 14,627.50, and the swing low is basically right at this 161.8 fib, which is kind of cool, and that's 14,468.70. So let's see, 14,4. So we're talking 100 and is that 40 points? Like let's say 150 points, right? We'll just round. We'll say an extra, or I could risk, I need to be able to risk 150 points if I'm going to trade on the 15-minute chart. You can't risk 150 points on an NQ trade. That's not a thing. Like it's $20 per contract, per point. So you'd have to take $20 times 150. So that's just too high for anybody to trade like and have a trading strategy that actually is scalable. Even with micros, it's not realistic. But with calls, you could do it. So we'll say my risk needs to be less than 150. Okay. And then my strategy is going to be very simple. It's going to be I'm only allowed to look for trades. Oh, I just moved something I don't want to move. There we go. I only want to look for trades if I am revisiting and potentially reversing at one of these previous swing lows or swing highs. So you can see these little triangles that the indicator puts on there, and then a shaded area that goes for a little while. The ending of this shaded area is time based. Just to ignore it. It's just identifying the level. If you like the level, like this one, you would draw a line there and then watch that level. Or like if you liked this one, you would, like I kind of like that one, for instance. You draw like a line here, right? Or this one. Oh, that's right. I gotta push another button. I forgot. It's this one. So this one is good. We'll just do all these. So these overnight ones, we're going to do the edges. So the high and the low of the overnight. Because again, we'd have this information before Tuesday open. And then we have yesterday's low. That's obviously important. But then you have the previous overnight session. So that's the low, right? And then this one lined up with a fib. So I'm going to mark that one. And then is there any other one that's not been liquidated? This one got tested here. So that's basically just new stops are behind there. So this is the closest, is this one never really got liquidated and this one never really got liquidated. So you could pick one of these, but both of these are overnight. So these aren't great. On the upside, you have the daytime. This is a really good one. The first lift here. The morning high, like the opening range high, if you will. And then you have the opening range low did not get a pivot, so we're going to skip it. And then the afternoon low is a good one too. At the high, obviously, we're going to mark. So this one, I'm not going to, yeah, it's got the fib on it. I don't want to mess with it. So it's just this dot here. I'll put it here. That should be okay. And then these are so close. We'll just, normally I would do this one, and then this one. Okay. So those are we're going to call those my potential trade locations. Obviously I can't just buy every time they are touched. Otherwise I will have way too many trades. But what you're going to see, and then we can add to these as we get more. But what we're going to see is after they open. Okay, so there's the open right here. So what you're going to see is at the open, we liquidated these levels. We went through and collected liquidity behind these overnight lows from Sunday. We went behind it, which is what we need to do. And that opens up the opportunity for me to look for long trades. I can't buy here on the way down. I'd have to wait until these, at least one of them, gets tested beyond. And then what you really should do is wait for a close back above it. But a more precise way to do it would be to have an order flow signal, either on the footprint or the DOM or the algo or your own way to measure aggression, and find an order flow signal of aggressive buying and trap sellers that happen when that occurs. So that would be a trade setup there. And again, my max risk is 150, right? But here, my risk is very small because here, well, compared to 150, it's, I'd put my stop probably at 14.5. And let's say I got in at 14.530. So it's a 30-point stop, totally reasonable for calls. What's my reward? Well, I want to try to get back to the previous day's close, or at least through some of these overnight lows. And the overnight highs up here would be like a home run, basically, to take out those. I would take profits if there were any sellers that showed up there. So that would be the first opportunity to get long. And then we'll just go 15 minute by 15 minute. And what you're going to see is you could take smaller time frame trades in here, such as this. See how we come up, we test above this blue line and then reject. If there was an order flow signal on the smaller time frame, on the footprint, on the algo, right at 15,550, let's say, underneath 15,556.50, that blue line, I might get a small short opportunity there, right? And then that would potentially be a long. See how it got underneath this one, but closed back above it, right? So this one would potentially, this one here, would potentially be a short on a very small time frame because it's closing green. So, and if you look at the big time frame, you should realize that sellers are actually trapped down here, right? That's why we marked this, because price goes down there to take the liquidity and then it leaves and it collects shorts down there. So you shouldn't be selling here looking for anything more than the lows. But if you thought it was bearish, which I see, this would be my first opportunity to do it if I was using the strategy parameters I suggested. But then here, that would be the long that basically counters that short, because if that short is going to work, you don't get this liquidity grab. I hope that makes sense. So there's another one. So if you see this 15-minute candle here, even if you just exited the short here, if you weren't sure, I don't know what direction I'm going to buy here, it comes up, it tests our level, it rejects, and you're like, you know what, I'm going to go short, and you flip, and then it closes back above this one. You're like, you know what, it's not short, but I don't know what direction it is. This closes a doji. I'm just going to exit everything. That makes sense. But the next one tests, if you look, it goes below our blue line, right, which is a liquidity level that we found yesterday's low. We know that shorts attack under yesterday's regular trading hours low. And, what are they expecting? They want to take this low. So when they attack it, and if you have the order flow signal to go long anywhere in here, if you can risk appropriately, that makes sense. Again, we talked about before how if you're using an option strategy and you're going to always be in the trade for at least 15 minutes, as long as you're not risking more than 150 points, you're potentially going to be profitable. You just have to do the back test, right? But we talked about that already. So you would get in here, right? And here you have a very small risk, right? Because it'd be confirmed here at 70 and your risk is back here at 40. So again, 30 points, totally reasonable for calls. And here there was this 15-minute didn't cross or test any of the liquidity levels, so there's nothing to do at 10:30. And then here we came up and tapped that level and rejected. So way up here, when that happens, if there was what's it called, a seller aggressively attacking that area on the DOM or on the footprint or with the algo, you could, if you see that, it's just okay, well, I'm going to peel off some of my calls because obviously they've tested this area and rejected, but once it closes here, it's technically still green. So in this case, you wouldn't necessarily want to be out of all your longs, in my opinion, but you'd any pump up here should be getting you out, because this is abnormal price action. When you have these highs up here and you can't press through them, and if you look, there's right, we didn't mark up all these, but if you look here, these are also getting rejected, right? So if you wanted, I think it makes sense to take profit somewhere in there. But let's say you held and you're like, okay, I'm just going to like trail my stop. That's okay too. If you thought this was a trend for some reason, that would make sense. Here, to me, it doesn't. That does not look like trending. That looks like they trapped somebody. They're coming back up to test the liquidity up here. They take it and they might pump one more time and then they're going to roll or whatever. So they do reject. And so if you weren't out of your calls and you see this guy, this little doji get taken, and it takes it aggressively, we should know that this overnight area can get traded through very easily. I mean, look, it opened, it just flew right through it, and then it trapped sellers, and what did it do? It went all the way to the other end. That is a sign, that V like that means that this area is fair value and nobody is defending it. Nobody on a high time frame is defending it. The only ones buying and selling in here is us, the very small time frame traders. So you are at a disadvantage if you're not taking trades where the higher time frame is getting involved. And anywhere inside here, the reason I didn't mark all of these is because it's fair value. If you can't see it, all you got to do, if you have trading view, or you can do this on Sierra, but just draw a fixed range profile from wherever the consolidation period started. So for me, that's usually, if this is a down move, let's say, that's like the first green candle, usually after the low. So if this is the low, it's right here. And then I would just take it to wherever I was at the time. So like here, and it'll draw the volume area. So this here is basically the area where I don't want to be getting involved in trades here. That's my target, right? And so with that new information, we should be able to see very quickly that this trade down here has much better expectancy than, see, this one is right at the edge of the value area. That's fine. But if we tried, did it disappear? Did we have I thought we had another one in here. Here, these little shorts, not great, right? We're taking a short, what I talked about as like, if you thought it was bearish, you're taking a short back inside the value area after we've rejected lower. Like, it doesn't make sense, right? Once you see it, it's just, it doesn't mean it can't work. It's just not going to work as often. And then if you marked any of these as important and you saw, let's say, this as a bounce and a liquidity grab off of this, which I see, it's just not as high odds because you're getting involved in the middle of the value area of a consolidation zone, meaning you're buying in fair value. You are trying to trade an area that no one cares about. Everybody on the higher time frame sees this price, and everything in between it as one price. It's just fair. It's something they're not interested in. They're interested in it buying down here and selling up here. That should be the assumption when you have any sideways motion. So, okay, so let's keep going with this concept, and you can see here. Oh, and then the VPOC, the volume point of control of this value area, that's where most of the contracts were traded hands overnight and in the beginning of the day. So that's going to be the choppiest area to exit, and you're going to have the most opportunities to exit, the choppiest place to enter, and you're going to have the most likely chance of exiting there. So if you bought at the low down here, it should be very comfortable to be taking profits here, particularly when you saw it reject off of liquidity level, right? So if before seeing that, if it didn't look like you were getting much for that long, you're not taking into consideration the previous price action because like I said, after a while you can just kind of see these things, but if you can't, if you haven't spent a lot of time with the profile, you may have to just draw it and kind of see. I don't care that it's right here. I knew the value area was in this general area, and I knew the VPOC was probably somewhere wherever there's a lot of volume, which was here. So I figured it's somewhere in here. But from my point of view, if I'm getting long down here, getting out here is fantastic, right? We can't always expect to hit the home run. But anyway, we do reject basically right at the VPOC. We test the value area high of the overnight and the morning, and we reject, and we come all the way through and note that we took out this like fair value pivot, right? Which I said like was not a great place to trade. A lot of people short that. They're like, overnight low, I'm gonna short, go to the low. Like, it's not a high odds trade. It just doesn't work very often. To get it to work, what you need is a market that came all the way back up, didn't take all the liquidity, and then has enough energy to take out this low. It's just not the way markets usually work. Usually they fire all the way through here, but they have to refuel. So the better trade here is to keep in mind the bigger picture that we have a fair value area, and to just ignore this, which is why originally I didn't draw it, and instead wait for the test and reject of any of these levels that we marked like pre-market, right? That we knew about already just from the pivots. And then if you see an order flow signal in there, you can put your long entry wherever the order flow signal is, and then your stop somewhere down here. And then worst case scenario, you're entering at the close of the candle. So here, I mean, that's that's almost good enough to take with futures for a long. So that was a good, in my opinion, pretty good long. And here's where it gets frustrating, I guess, and confusing. You're technically buying in the value area, right? But your signal occurred under it, and you're responding to the trap shorts down here failing to get any traction below the value area. So we waited to get back in here with the plan of riding back up and taking the stops that all the shorts put in the morning. So it comes up, and then right there, see how it came up and it tapped our level? Like, just take profit. Like, be out there. All the stops that the shorts put in expecting a new low have been sucked up. There's nothing else to hit. To go higher, we'd have to be going back into this range. Do we have any reason to think that there's new whoops, I went too far. To think that there's new maybe I didn't. There. Energy here. When you look here versus here, yeah, there's lots of volume on this first one, right? The first candle here, the first 15 minutes. Obviously, some people shorted really heavily down there, and they got stopped out, right? We got over this level. So if you're a short, you're putting your stop here, here, or here. You're not day trading and putting your stop up above yesterday's high. No way, because that's way more than 150 points. And we just talked about in the beginning why that would be totally crazy to do as a day trader, to put a 150 point stop. So with conditions like this. So knowing that, we know that most of the shorts have been taken out now. So in my opinion, this is a fine place to be done with the trade, done with the day, if you caught two of them. And you're great, right? Did I do that today? No. But that would have worked. Now, we got one more opportunity to go a little higher. And if you weren't sure if it was time to exit, this candle should have confirmed it for you. If you thought we might be developing volume above the value area from yesterday or overnight, this rejects that because it closed back in the value area of the overnight range. And there's a really good chance after rejecting up here where all the stops would have been and coming back and closing back inside here, right back at the VPOC, we're probably going to visit the opposite side of the value area, if not this pivot. Can you short? Technically, yes, right? There's nothing wrong with it. You just have to think that there's enough time and energy to actually push us lower. And when I look at this volume, which is super important to watch, I don't see a lot of trap traders because look where the buyers were. If you're looking for a short, you need to trap somebody at the high at your time frame or a smaller time frame than the one you're trading. If you assuming you're day trading, and you have to do it at a location where a bigger time frame got involved with you. So did a bigger time frame get involved here with the short? I don't see anything, right? Like there's no bigger picture reason to think that there's some big seller here. It's like the lowest red volume candle we've seen all day. So I don't think a lot of people sold up there. And this green one looks kind of big compared to the one before it, but look at the red one that was actually lower than it, just a little couple, like 45 minutes before. It's way bigger than this one. So very few people are even doing business up here, which is probably why it's rejecting, but it means there weren't a bunch of buyers trapped. Whereas down here, we had a big push of sellers, right? Lots of volume in this candle versus these. And they look at that range. So they worked really hard to bring it down here and got trapped. That did not happen here, in my opinion. So there's no real reason to think that we're just going to drop. But if we are, we're probably going to go to the value area low or the pivot, and then we see what we find there. So not surprisingly, we come right to the value area low. And honestly, at that point, when we close here, I'm getting ready to take profits on any push lower. And as soon as we break this one, I'm out of my trade. Not only because it's like the morning's over, but like the trade is done. Like if you look at this, look, when this closed, it had a lower volume here at the low, or at this lower low, if you will, than the previous one up here. Most of the volume was in this value area. That's not bearish, right? Because look what happened here. We went through it. We had a bunch of volume. Where? At that VPOC. Well, here, if you want to call that a lot of volume relative to this, where is all that volume? It's probably right at the VPOC. We can measure it if we're not sure. But if I had to guess, most of this fired off in the middle. Yeah, see that? So you can see it on the footprint if you have that, or the profile throughout the day, or you can draw it, or you can just watch the algo or just watch the DOM yourself, because that's really all the algo is doing is watching the profile and the DOM and the time and sales and and giving us signals for when things are happening. So most of the volume here was right in the middle, which means that higher time frame traders aren't really getting involved. No one's really interested in fighting this low, because if they were, they would be hammering this, right? And yeah, some people stopped out of their longs, right? They caught some stops here, I'm sure. People who tried to buy the breakout and then put their stop down here. There'll be some volume down here, but it wasn't building, right? And so because of that, they get a retracement. Where does that retracement usually go? Right back to the value area, probably back to the VPOC, or wherever most of this volume was when they sold off, especially when this goes straight down without even getting much of a bounce here. So not surprisingly, well, actually, they tried and they rejected, but on low volume. So we're just filling in this area first. We're probably headed up there. Let me see. I don't actually know. Yep. Yeah, right there. But this is where it gets tricky, is nothing goes in a straight line, right? But let's go back to our technique that we were talking about. If you wanted to trade the afternoon, which is often hard in a balanced day, by the way, But once you identify this, because in the morning, let's say you miss this and you're like, man, I missed the long and I missed the short, and now it's here and I see volume decreasing and I'm pretty sure we're not going to break this. So what do? Well, we need to get to a level that we said we would be willing to trade at, right? And then we need to see a rejection. So I need to wait. I can't just trade this. Now, I could move this blue one here, the overnight one that we already kind of tested twice. I can move it right there to that earlier one, especially since it's got such a big volume compared to the last few. It's pretty strong. So getting under that and then recovering it or rejecting it would be better. It would be a decent place to get long. Note that once this one got used, we kind of faked out here, right? So you have to be kind of careful. It's not that they only get one try, but you just, every time you use it again, your expectancy is probably decreasing a little bit. So we can either remove it or we can move it to here. So let's just see what happens. So we recover this level, and on a smaller time frame, we might have seen some action in here. Otherwise, it might have just ripped, and maybe there's no trade. That happens. And then, did we get a pullback? Yep. Okay. That's what I thought. So yeah, it came literally right to this one. And that is hard to beat. Like, we knew that level would be important. They came down. They couldn't get through it. They rejected it, and they lifted. So by the time they close, you can put your stop down here, get long here, and you're targeting the VPOC. The problem here is there's only like an hour left in the day, and there's no energy. Look at volume. It's just dead. So you probably would have to trade it overnight to be able to get that move. And who knows where we'll actually open, because in the meantime, this can continue in here. It can do whatever it wants. But in the meantime, what we can do is we can take our value area that we measured before, and since we're still basically in that same range, we can extend it now, and it's going to shift a little bit. And so now for the next day, or if we're trading Europe or whatever, we would now take, now this one clearly got tested here. I'm not a perfect test like that. I'm done with that. that level is finished. So I'm going to move this one. But look, all of these are inside the value area. What does that mean? It means that the trades that I take at those levels are potentially going to be trappy. They might not work on the very first try. So I will mark them, and we will see how you would have done on a smaller time frame just to demonstrate this. And like I said, then I'm going to switch to the algo. I'm going to show you how I actually do this, but this is a good example of like how you might build a strategy if all you had was candles. So we're going to experiment here and see how we would do. This one never got tested, so we'll just ignore it. This is the first one that got tested, and then, oops, and then we'll say this one. And again, these are just 15-minute swing highs and lows. Okay, so we're going to go to overnight, where we bounced off of this exact level, right? Where was that? Here. So this one. We knew about this here, so we don't want to take a trade there. We wouldn't know about it until after. Okay, so that should be this one, right? They don't always sync it up as well as Sierra chart does. Let me double check this. What's the actual time when that occurred? Whoops, can't even see anything. Let's see. All right, so the time on this one, 15:30. So we're gonna go down to 3 minute and see it jumped forward. It's annoying, but 15:30. Okay, so it's that one. So how would we have done? Again, we would not have known about this, right, until it happens. So how would we have done from here on if we said we could only take trades at these levels? Now, these ones also did not develop yet. So did we get back to them? Here, we developed this one, right? Did we get back to it? Okay, that's when this one developed. So we need to test below it and then bounce over it. So nothing to do in here because this one literally just got developed. I shouldn't have moved the lines. I should have redrawn them. Okay, there we go. So there's one right here. That would be a test reject overnight, right? And again, you are in the valley area, right? Can you still see that? That's annoying. Oh yeah, you can. Here's the valley area here. So, and then here's the VPOC. So you're like right next to the VPOC. Is that going to be a good place to enter? No. It's a trade I would skip. So even though we had the level already here, I wouldn't even play with this because it's just going to trap you over and over again. If you sell this one, it's going to go a little bit, come back, take your stop, and then go where you're headed. If you want to wait for the trap, that might work. But other than that, I'm not like this. Like, that's just bullshit, right? Like, no one wants to short this with a stop above it, see them take their stop, and then run through the valley area. It's just ultra frustrating. So to avoid that, just don't trade near the VPOC when you're trading in a trading range. Just ignore them. But you can see, hopefully, how frustrating that would be. So down here, we're pretty far from the VPOC. So again, that's our target, generally. If we think that overnight, we're just going to trade in a range, which is usually what happens when you have this kind of balance. So did we know about this one? No. This is where this one's developed. But we knew about this one. So this one tested below here and then closed above it. So stop would go underneath and your entry would go somewhere in here or conservatively around here, and we would be targeting back up here. So how does that do? It stops out. Why? Because we're in the middle of the valley area. Right? I'm pretty sure. Yeah, like right there. That's the valley area low. We tested below it, tried to bounce. They failed to get the VPOC. They're going to reverse it and test below it and see if they can trap shorts down there. So if you took this one, don't bother with this one. That's what I'm trying to say. If this didn't make it to your target, I mean, if you were targeting overnight or yesterday's close and it got this close and then took out that candle, just get out, right? Take like that's a rejection. If you really wanted it to go here and it can't get over that daily close, like, not worth it, right? Especially since it didn't really go very far underneath the value area low, which I wish they would extend this. It's here. It really just barely tested it. So it would have to be very bullish. Look at the volume. Does this look very bullish? Most of the volume is on the selling. And then there's one big volume bar here, but that one only went here. What happens when they went over that? Did you get any volume? Nope. Where was the volume? Down here, right? So if I mark this one, what we're going to see most likely is an attempt to save it right there. This is the kind of thing you can take if you're a scalper, but otherwise you should totally avoid them. When you see the rejection and the second bounce or the third bounce on that level, just ignore it because it's useless. Wait for this low to get taken. Right? So low gets taken. Note that even on the tiny little 3-minute, I can see that rejection is not very impressive. There's not a ton of volume down here. It's less than average, which is the blue, the shading. And so we're not really jumping off there. If I looked at the DOM or the footprint, I'd see no aggression there. I can almost guarantee you. But I can just see it with volume. There's just nothing there. Okay, there's our first real attempt to buy something off the low. And not surprisingly, it's right at that level. And that level we didn't know yet. Never mind. That's where we found out about it. So let's see if that one gets tested again. Oh, I see. They came back through this. But again, we're approaching the value area low. And I don't love trading right into that. That's our current target, basically. And that's exactly where we're entering. So I'd have to see them get back in there and then bounce off that area. And kind of like that. But they got to now get over this. And see the volume decreasing? It's just, there's no interest. Oh, they got it. There we go. So that looks better, right? This here looks better. I don't know if I would have taken this, but that move looks a little bit more significant. It is overnight. It's still pretty low, but it looks more convincing, right? But by the time you knew, you're already, oh, I guess it's a 3-minute chart. It's not that far. So you could probably try that. I don't know if it'll work. Where's your VPOC? Up here? Could work. And again, your stop would have to go down here, by the way, on the back of the 15-minute chart. So you do get a little pop, but notice volume is decreasing. Right away, I'm like, probably not going to get there if you're targeting this. Probably not going to get there. Oh, there's some volume. That's where we want it. Now we need to see how the volume's lower as we try to test higher. That's divergence, and that's not what we want to see. Okay, this might do it. There we go, building. Now it's got to break that with more volume. Hits the overnight close, or the yesterday's close. There we go. That's what you want to see. So that's probably shorts covering, which is promising. So if you would have gotten in here, that move actually worked. And where is our value area high again? Oh, hi, cat. Okay, that's enough. Where'd it go? Oh, I see. Right up here. 14.6. Let's see here. Yeah, so we have another 10 points we might be able to get. The VPOC is right here, though. So if it rejects there, I'm done. Oh, look at volume. Nothing. Yeah, they're just going to let it go. That sucks. There's Globex for you. Oh, they tried to trap somebody. But again, I'm not going to mark these levels on the 3 minutes, so I'd have no way to get back in here if I decided to exit. But if I would have held some runners or something, I might be able to still be in this trade. And they're just going to hang out here. See volume decrease. They're losing interest. Yeah. And now again, I don't have a level here from the higher time frame. Well, higher than this. So, but there is clearly something going on there. It might be the open for DAX. That could be. Tested somewhere, but they didn't get to my levels. So nothing I can do about it. But I'd still technically be long. Oh, there we go. But again, look at the volume. It's like not good. Okay. They're just hanging out here. They're not doing anything. Nothing. Oh, yeah. There. Look at that. Volume. Now, should we short this? Nah. There's no reason to. Because we're at value area low of the consolidation. Best case scenario, it maybe tests under here and bounces, right? So, like, now I'm probably, like, getting out of that long because it's just like, okay, that's not working. But they could have set you up here, I suppose. I'd want to, on this time frame, I'd want to see them take this with volume. So is that where we are now? Yeah, but this is the big volume, right? So really what I want now, if I want to be long, if I'm thinking this is another test of value area low of that consolidation, I want to get over this and I want to see volume get in. But again, if you look at the 15-minute chart, that's just this bar getting taken over, right? That's not that much room. It's not that much work. Oh, actually, we have a ways till value area low. So I'd still be in that long. I thought this was value area low, but it's this one. So I'd still be in it. And in that case, you probably could, if you didn't take this one, which I think would be fine, this one is just as good. So, all right, so I'm going to delete these. And then, well, it's fine. I'll leave it. And then, because I don't want to take the time to do it. I'll do it later. Oh, what did I do? Okay, hold on. Lost everything. Let's see. There we go. There we go. That should do it. So now let's look at that low on the algo, on the different time frames, and I'm going to show you why I didn't buy it. And then we're going to go, I'm going to take a look at some, like I said, some new ideas, and see how they do with those location and volume ideas, like those concepts applied. So here's the low of the day. See how it's brown? That's the overnight low here. I believe. Yes. So this is the close, and then this is our overnight low. So on the algo, what we saw, if you look at these bars here, the little waves, those are Weiss waves. So it's accumulated volume for the rotation, the direction. So a single direction will get its own wave. So the green ones are rotations or waves up. So this. And then the gray ones are rotations or waves down. In the trade and perform room, the way Simon teaches it is these 2-bar waves, like this, 1, 2. We don't count those as valid Weiss waves because, and I agree with this, that move right here is more of a pause than an actual rotation. It's just a retrace. You can't really use that as like a move up, right? But if you can get 3 in a row, gray, 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 or green, green, green. This one got 4, but like these are just 2. So that whole area from here to here, it starts on this one. Whoops, I grabbed the wrong tool. Starts on, nope, one more. The down wave. And so that, we're not counting that at all. It's not a wave, it's just pause, right? But I will count this as a down wave and this as an up wave. Now, these aren't Elliott waves. These are Weiss waves, so it's accumulated volume. Why does that matter? And why don't I have volume, like regular volume, showing on the chart? There's 2 reasons. Number one is that it's already integrated. Volume and relative volume is already integrated into the signals and the colors and stuff. So for instance, I know that when I see a purple or a pink bar, I know that volume is likely decreasing relative to the previous bars if I see purple or pink bars, because purple and pink bars exist when you have the market moving due to orders getting pulled off the order book. So it's price moving due to illiquidity, and that almost always exists with decreasing volume. If you just imagine, like, there were people on the order book, and now for one reason or another they pulled those orders, and as a result the price moves through that area very easily. It doesn't require a lot of fighting to get over less orders. So volume relative to where it was the previous time it went through that area it's going to get lower as you go back through it. So I don't care how many contracts were traded in here or here or here or here or here. I don't need to see the numbers. What I care about is, was there more or less volume in the low versus before the low? And I know just because it's purple that there was less. Just like up here, if it's pink, I know there was very little volume at the highs. But with the Weiss waves, what I can see is how much volume accumulated in that direction over the entire wave, right? And then I can see that that wave ended in a pink bar, meaning nobody was interested in taking it any higher. Even though sellers pulled their orders, there was no addition of new buyers. It was just price moving due to illiquidity. Now, well, the algo interprets that, right? Which we code. So, and then like you can see in the wick, this is also pink, right? And then this one's also purple. So because of that, I know, for instance, that there's, it might be a big volume candle relative to an hour ago, but I don't care about that. I care about how much volume is there compared to where with the last time we went through this area, this price. So if I had the volume by price tool showing here, what you're going to see, this might not be a great example because they they go back and forth. But if you have a pink bar or a purple bar at the edges, it's not going to have a lot of volume. Here, I'll show you. So here's a pink bar at the edge, and here's a pink bar at the edge, right? And if I make this visible, let's see, this should be able to be seen. Okay, so look here, low volume node, pink bar. Here, low volume node, pink bar, purple bar, low volume node, pink bar, purple bar, right? Low volume node, pink bar. And it doesn't matter where I go, that's just going to be the way it looks. So like I could do this one, and it's the same damn thing every time. So I don't need to interpret bars of volume when I just have it changing color when I actually care about volume. So here, where are the low volume nodes? There's one right here. Well, that one was at the edge of pink, but here's the pink right here. Oh, and this one is the big low volume node. And to the right, it's pink. So I would have probably missed this. I wouldn't see that. But if I spread this out, what you're going to see is wherever there's a low volume node, there's going to be pink and purple bars always, right? And all that's telling me is that that's an area that no one's interested in defending. And that's not bullish or bearish all by itself, but what price does after that and what price has been doing there before, it can give me a lot of clues about whether or not it's bullish or bearish. And then relating that to the Weiss waves, the accumulated volume, I can say, for instance, here, I can very quickly see that we have a very weak down move, right? It's a lot lower accumulated, even though it's bigger in range. It's all these bars are lower than any of these, right? Yet we're going lower, okay? But there's no big volume player in there, right? And if let me just make it bigger so I can show you. So you're not, where'd it go? I made it too big. Uh-oh, where'd it go? Where did it have? Okay, so it was this one. Okay, so I don't want to make it too big, but this wave down here is weak, right? I don't have to see individual volume bars to see that. I can see that relative to the last time we were in this zone here, that nobody was interested really here. And even though the bars get bigger on the Weiss waves, realize that doesn't mean that all the volume was on the end. It's accumulated over time. So to see the big volume bars, if what you care about is where is the biggest volume bar, there's two ways, three on my charts to do that. The hardest way, but sometimes the best way, is if you see, particularly you'll see this on bigger volume waves, Weiss waves. If you see this wave here, look how this change is linear, but this change is like exponential. See how it starts to get exponential, right? There's building volume in here. One bar after the next is getting bigger and bigger and bigger. And the algo identified an aggressive trader on the short side, or, well, a seller. It could be a long exiting too, but a seller showing up here with a lot of aggression. And that was right when that change started. If you look here, let me just do this. So if we just put then you won't be able to see it. So it's this bar right there. So see the difference here is like pretty severe compared to these two. So this to this, nothing much. This to this, nothing much. Obviously here to here, you're going to see a big difference, but that's because of the change in direction. So, but then the important thing to see is this. But again, the algo is going to clue me in that not only was it bigger volume, but he was actually trading aggressively. And I'm not going to get into how the star is built, but all you got to know is it's an aggressive trader on the footprint. The other way is if you see a diamond, they're pink and purple, on the outside of the bar, that is a sign of a very large trade. So I might be missing some, but it's overnight. So, oh, there's one. This, and then it's purple on the bottom, but they're outside of the bar. That is the sign that there's a big trader in there. Not necessarily aggressive, but bigger. And if you look at the Weiss wave here, you won't be able to see it because the bar before it was going in the opposite direction, right? It is bigger than they usually start, but you might not notice that. So when they are in the beginning like that and there's a big trader, I'm going to get the pink diamond. And that can also be used for a bunch of patterns. The last way is if there is a white or a red diamond inside of the bar. Let me find a red one. They're inside the bar. They're there. So that means that the bar right before it, so this one here, had, let's see, how can I explain this? It had more volume there than expected based on not necessarily a big volume player, but more volume there than expected based on like relative statistics. And we have now traded under it. And when we took that level, it gave it away fast. And that's what the diamonds in say. So I called that speed trap because it's trapped a big volume player and it's done so quickly. Now, in this case, it's a purple bar, meaning it actually had less volume, but that should make sense because we had a big volume player. Now you have another bar. It flew through quickly. Why would that happen? Maybe because people pulled their buy orders and suddenly that big trader's like, you know what? I don't want to hold this anymore. I'm going to get out of here. And because they don't want to get trapped. So a lot of times you're going to see those diamonds at the edges of a rotation. Okay. One of the things I've noticed recently, and this is trade number one, trade pattern number one. It took me an hour to get there, but the way it works is we are looking for a scenario where we have a diamond on the inside of the bar. So either a white one like that or a red one. And they show up relatively often. White, white, red. Now, so it has to have that, but it also has to be positioned correctly. So we don't want to buy up here. We want to buy at the bottom of the channel, or at least at the bottom of like after a pullback, right? We don't necessarily want this one. We would prefer to see it touching this gray line or lower, really. That's the easiest way to say it. If there's one down here, it's going to be way better. Then the red ones, we want them up here above the gray line here, and preferably on top of the channel or above it. That would be the best place for that. When you have them out of position like this, where they're not the high, but in the middle, you usually need to wait until you return to test that resistance or support if you're going up before you consider getting into trade, unless you're trending. So that I already knew. But what I figured out, let me just go back to where the day starts. So I'm sure we can find some because there'll be lots more activity. Is when you have one of the diamonds on the inside and right before it, see this dotted line here? It's red, white, or blue, depending on which direction it's going. That is basically the developing point of control, similar to what we were looking at on TradingView, but on a faster time frame. So it's showing me over time where most of the contracts have been executed, where most of the trades have been executed. I want to look not only at where that is compared to the bar like price, right? So like the bar closes there, and that's when the diamond is confirmed, because it doesn't go away once it prints. And I am above that dotted line, right? That's important. You don't want to take the trade if that to the long side, if that dotted line is right above you, because it's going to act as resistance because a bunch of people did trades there and they might want to exit. So like in this case, see where the dotted line hung out for a minute? That now becomes resistance. And that is going to produce a trade setup. But before we get there, another simple trade setup is if you have a diamond and right after that diamond, there's a triangle, especially when that diamond had a blue dot and is positioned at the bottom of the channel or at a pullback like this, not at the highs. As long as this dotted line lifts on the triangle that follows the diamond, usually you have an opportunity to immediately join the trend if you think it's bullish. Now you can see here it didn't work. And the reason is because this one is pink. And what that means is it basically had very weak volume, even though it was at the beginning of a pivot here. There's so much effort being put in to the downside, and they all took a break. But even though we got the VPOC to lift, it's not really confirmed bullish yet because we haven't seen any volume. So before I've actually got a video talking about how if you get the dot and the diamond and it's followed by a triangle, as long as you're trading with the trend, it's usually a good place to enter long. And then the reverse is also true for the shorts. Well, the reason that doesn't work when you're taking a counter trade, I realized, is because you're fighting, when you're counter trend, you are fighting these high, heavy selling, sorry. These guys are selling with a lot of effort. And particularly if the triangle is pink and the bar with the diamond is pink, there's just no energy there. So the chances that we break through all this without having any energy behind it is like practically zero. So the diamonds that show up in the bars, when the bars themselves are purple or pink, it's not that you can't enter, but you absolutely should not enter it against a big wave, right? Because you're going to have very weak volume. And like we talked about with Weiss waves, that's nothing compared to this, right? There's this huge down wave that's clearly what we call dominant, okay? And then here, big down wave, right? So if all we've seen is this, is there any sign of buyers here? Not on this time frame. Hopefully that's clear. Because all we see here is committed sellers adding volume over and over again, and then some resting. Yeah, it happened quickly, which is what this said. And there was a lot of volume here. But if we can't put volume above it, that big seller, it don't matter. So the other way to do this is if you're trading counter trend, whenever you see a white diamond, whenever I see a white diamond, what I want to do is I want to put a line there. And I basically want to say, I can be bearish unless I get this yellow line, which is the VPOC of every bar, unless I get that yellow line above it on a bar that's not pink, in other words, a bar that doesn't get to that level just because people pulled their orders, but they were actually new buyers coming in. As long as I can get that yellow line up there, it means that the majority of the buyers in that bar actually traded above this big player. Now, if I want to be even more aggressive, rather than doing it at the high, I could actually find the VPOC of this high volume bar and put the line there. But then I need to be very careful if it chops back and forth, and I don't want to be aggressive entering. But what you can see here is you can get pink bars above it, and you can get the VPOC above it on bear bars, bars that close bearish. But when you get a bull bar, all the volume is below it. So in other words, sellers are taking profits here, but they're not letting buyers show up in, they're not letting buyers take this and push it higher, because as soon as they try, right, you got a lot of buying in this wick, the VPOC is way up here. But when buyers tried to push another 15 ticks up, this is a 15 tick Renko bar, the sellers showed up again and knocked it down. That's bearish. So this, and this, especially this star, pink bar, star down like that, or star followed by X the other direction, if that's happening below a diamond and it's bearish, that is a short, not a long. Now, here's another one. So you could actually do it here too, or aggressively here. So if all I had was this, I would say I'm bearish unless I get a bar that's bullish, not pink, and it has the yellow line above that white line. So there's the yellow line going above the white line, but it closes bearish. That's bearish, right? Diamond followed by X. It's probably going lower, and I can just short it if I want, or I can wait. So bearish, bullish, but I can't get the yellow line above. Okay, I get the yellow line above, but it's pink. The only reason I'm getting up there is because sellers pulled their orders for some reason. If there's no buyers when sellers show up, I don't want to be a buyer either. Well, we get some buyers up there, right? We got the VPOC to lift into the wick, and we even tested way up above this star here, which had an aggressive trader at the wick. Now there's some people fighting up here. What happened? They were unable to get another 15 ticks before the sellers came in. And what do we see? A star and an arrow indicating a momentum shift. And when it's bearish, pink bar followed by either one of those, and especially when those are all together, is a short. So that's a short. And then bearish bar. This bullish bar has the VPOC way back down here. This bearish bar can't even get the VPOC above that level. Definitely bearish. And we go lower. So, and I can go anywhere and do this on either side. So let me show you another one. It's better, it's very clear if the dominance in volume is clear. Let's just go back a whole day and we'll find another one. And then I'm going to show you the continuation or the reversal trade. Actually, this is the continuation. It's the reversal, the other way to do it. Which is, like I said, just to wait until you get that yellow line above. And then you just need to get a triangle or a star in the direction you want to go. So bearish, right? This is, I don't want to do, see, this is the PMI or whatever. I don't really care about price action during that time. But so this guy had a lot of volume. This one fired fast and filled lower, taking that VPOC out, right? Meaning that this guy is potentially trapped if he bought up there, right? So do I have bearish dominance? Look at volume. No. I would say no. Here's the last bear bar. Here's the last bull bar. Which one had more volume? bulls, right? Now, here's something pretty cool. I think it's cool. If I go to a bigger time frame, and which ones you choose is up to how much you want to risk and how long you want to hold a trade and stuff like that. But let's, for instance, look from a 15 tick jumping up to a 40 tick. I can look at this exact same spot, 906. 9. Why isn't it aligning? 1435. Oh, it is. It's just gone higher than this. Okay, so it's this whole move is like these bars. So it's a very big time frame, right? Here's my pink arrows. All right. I'm going to get rid of these because that's could get in the way. So take a look here. On the higher time frame, what do we see? Who's in charge? That's the question. Who's dominant? Buyers or sellers? I'd say buyers, right? Buyers are dominant here. Where did that start? When did this change from linear to exponential? And I'd say for sure, these last three, there's a big change there, right? So the last three up bars, we're going to put a line below it. And we're going to say, if you can get under that and you can develop volume under that, you have a chance to reverse it. In addition, if we can get a, what's it called? A divergent wave. So a push to a new high that has less volume compared to the previous high, that, and then we take it out, we go lower than it. That could also be a sign that we're at least going to rest for a while, if not reverse. So here, if we say that this is where it's way back here. So if this is where the buyers really started to push, right? Which is here. Okay, and here we're going to see a lot of waves. Look what happens here. So we have a big buy wave, right? Big sell wave, bigger than the buy wave. Okay, on the bigger time frame, what we're going to see is that we actually went under that. Right there. See that? And we got the yellow line under it on a bear bar that's not purple, which you're going to see is a pattern for a lot of my setups, because where volume is in a bar can tell you, can improve your odds, I would say, of what you should do. Now, all I need to do is jump to the smaller time frame and find an aggressive seller. There's a star right there and a red diamond, a speed trap, right? So now the problem with this speed trap is it's positioned poorly. It's way underneath the gray line and it's at the bottom of the channel. I really want this up here. So if I'm being conservative, the right thing to do usually is to wait for a pullback and enter, unless I'm selling a breakdown. Well, when I look to the left, this is selling a breakdown. So this is one of those exceptions where, especially to the short side, you just don't get that many opportunities for pullbacks when you have a huge volume wave get taken out by an even bigger one. It's just too many traders up there, probably from higher time frames, that are completely trapped, and they're not going to take any chances. They're just going to exit or flip. So I'm not going to get a pullback here, but if I didn't get in here and I see that we do break down and I get an aggressive player down there, as long as this holds and I can't get volume above that, I'm going to keep shorting, because this guy was willing to short aggressively underneath this low. That's really aggressive. He added to his position or maybe stopped out of a really big long. For some reason, he got extra aggressive under the low of the day, right? If we're bullish, buyers are going to take advantage of that and pull above it and then follow through, right? and reverse it. So as long as that doesn't happen, I can be a seller. Now look what we see next. A white diamond, meaning a speed trap. Is it bullish? No. We talked about how the higher time frame, we have trapped buyers above us. And even though the location is poor on the channel, it's not neutral. So we would expect price to have a really hard time taking a high and making a higher high. And so expecting a pullback is not realistic in this situation. And then, like I said, we know that because we've got an even bigger volume Weiss wave after a divergent one. So this is a big one. And then we went higher, but didn't put as much volume in. And then we got under that. Right? And that's the kind of situation where you're going to get a reversal. Otherwise, having a really big volume up and then a really big volume down and taking out that low of the volume up, great place to look for a breakdown because everyone's trapped. So how do we trade it? Like I said, we could just sell that. If you didn't, what do? Well, we know that there's lots of volume here and there happens to be an aggressive trader. So like I said, all we have to do is make sure they don't get the yellow line above the green line now on a bull bar that's not pink. Okay? They get price above it, but not volume, and we get an X down. I mentioned before, it's a pretty good place to short as long as it's bearish. And it goes lower, and now you've gotten a bull bar, an aggressive trader, right? So we should look, who's in charge? Is there any chance that the buyers are going to take this back? Well, on this time frame, like I said, we had trap buyers, a huge sell wave, and then look at the buy opportunity here, the attempt, right? 2 bars, not even worth mentioning. There are no buyers here. The only issue is at the moment, there's a divergent sell wave, but that doesn't matter unless we can get above this, where it started. So that's a non-issue for now. If anything, it just means we might chop around for a bit and I might get a better entry to the short side soon. But this is definitely not invalidated the short trade on this time frame. We get a pink bar. And now what happened? We got a bull bar with the yellow line above the bar that came before the speed trap. I don't want to be short. And if anything, I might want to look at whether or not it's a good idea on the higher time frame to look for a long. So let's look. On the higher time frame, what do we have? We have a big buyer, big buy wave, and a puny sell wave. And on this time frame, we now have a confirmed, because it's 3 bars here, we have a confirmed divergent wave. So it's exactly what we saw over here, only in reverse. Right? Hopefully that makes sense. So you didn't know for sure, and it would make complete sense to sell this, although it's aggressive because you're not building a lot of volume yet, but there's no reason to think it's just going to reverse unless you're looking at the higher time frame and recognizing that you're coming near the overnight high and that you've got a bunch of pink bars here, meaning that when this fired off at the open, they moved through this because sellers pulled their orders and now they're coming back into that level. Do you think sellers are just going to pull their orders again? Yeah, they might. Right? No one was interested in selling it at the open. So if there's buyers here, sellers might pull their orders again. So, and sellers know this. So because of that, it actually makes it more likely to happen. So what happens? So you get the little bit of sell. Like I said, you get the trap back in. I wouldn't personally trade that. You could, if you identified this volume situation, you could, but it's not the way I usually do it. Usually I wait for this And then if I did short this or this or this, I'm definitely out of that trade. Even if it's a loss, I don't care. I'm out. I'm wrong. And now I'm looking for evidence that we're bouncing. Okay. We did come back into these pinks, the multiple pinks, which are usually support. And if you're watching that, you might want to expect that. But now if I get a pullback and a bull wave that's dominant, bigger than this one, I'm probably thinking it's going higher. So it pulls back, pulls back, pulls back. Okay, so this testing below this flag and then closing back up high and a bull, that's pretty strong as long as I have a reason to be long at this location. This is overnight high. It's a pretty good spot usually. It was overnight high for a reason, and we've returned to it. There were a bunch of pink bars in the higher time frame. Everyone pulled their orders on the order book when it went through it. So traders expect that to happen again. It's not a bad place to get long. If you weren't sure, what you do is since it's a speed trap, if we're like, it still looks pretty bearish. We did not get a bull wave that's dominant to a bear wave. If you look, I make these little lines extended from the top of the previous wave, and we were unable to get a green one bigger than a gray one. So it's bear dominant. But what you'll see is pink. And so now if we get another one that's not pink, it's clearly bullish. Pink. It might fail. Oh, there it is. Okay. So now, if we had any doubt, we know now it's bullish. And that is the spot that I'd want to be getting long if I didn't buy this one. But I had good reason to get there because I've now gotten a down bar that was divergent, right? Smaller wave than the previous gray one, yet we went lower. On the higher time frame, I have buyers in charge. And now I've got a trap back in, an aggressive trader at the low, which is the overnight high. I've got a speed trap, and I've gotten somebody above it. Plus, this buy wave is now dominant. There is no reason to be short here at all. Okay, now the other thing I talked about is that dotted line, the developing volume point of control. It's way up here. That's not a concern. In fact, that's my target. It's far enough away that I can target that. And I can enter way up here at 04 and probably take it to there. I don't know, but I might. Let's see. I'll extend it since it did shift. And I'm going to show you why it shifted. Is it going to do it? Yes. Target hit. Right? So that's how that's done. And that's a good trade. If you look, if you got in here, which is like the most aggressive way to really do it, the highest I would get in, 14,604 to 14,636. So it's 30 points. That's $600 per contract. I'm happy with that. Now your stop in this situation is a little tricky. Let me just erase these. Realistically, your stop belongs here. Like, that's where you know you're wrong. But I should say theoretically, it belongs there. Realistically, what we expect is that these pink bars are going to hold. So as long as my stop is behind that, I'm good. And then if I have another time frame with a set of pink bars like that, I can do the same thing. And then the blue dots, I'm not going to go into it yet. I don't want to confuse people. Okay, so now we've seen the reversal where we wait to get the yellow line above the bar before the diamond on a bar that's not pink. And then you just need to wait for the optimal entry, which is either find a pink bar and buy the location, or follow an aggressive trader into the trade, which is either one of these. And if you want to do this with a very tight stop, it's fine. But what you have to do, in my opinion, is you enter here, you put your stop here, right? And if you get 10 points, well, however many of this is, what is that? Let's say, just to make the math easy. Let's say it's 10. So I need to get to 05, and I don't. Oh, wait, 15, and I don't, right? So I would get stopped out, but I would then get long again here. Oh, right there. Targeting here for my first one. And then I'd hold a runner to here. And so I'd get 30 on one contract. So 600 plus 10 on the other one, which easily, in my opinion, I mean, I'm fine losing, what is it? Let's say it's 2 contracts. So you're losing 400 on the first trade, and then you're making 800 on the second one. I'm cool with that. And then if you want, if you see this, so we'll talk about the next one because I've already been going for an hour and a half. If you watch that dotted line and you're a scalper and you like to be really active, what you want in reality is you want to see it move in your direction on a triangle. That's best case scenario, particularly after an aggressive trader, like a diamond. It's particularly good. Here it's so far away that we're not going to see it. And there's no triangle here to demonstrate it. And here it did not move down. So see how we got the triangle, but the dotted line did not shift. That is generally a sign that there's a high probability that this move is not going to produce a dominant wave. And if you look at this wave before it, you can also see it's huge compared to the previous, right? Bear bar. This is even after 3 bars right here. It was already dominant and it just kept going, right? But it's also divergent. It went higher than the previous lift, but it has less volume than that, right? So it's potentially a location where you want to take some profits because we might be resting. And if we take this out, the low of that divergent wave, it's probably done. So I can move my stop to below this, like a point or two, and it should hold if it's trending. See that? In fact, if you look at where the volume went, where most of the volume went off, before, like I said, it's way up high, and that's our target. If you're bearish, what's your target? Well, you should know that it's bullish here. Bears have not had any luck moving price to the downside, right? It's been all buying. So best case scenario for bears is they get a pullback. They're going to target the high volume areas, the VPOC, most likely, of that move. So you can write a study and have it track it, or you can just draw it like this, and it'll put it right where it is. So if I mark that, it's like 97 or so, right? And that, more or less, would be my short target if I thought I could get a significant pullback here. I have no reason to think I would, but that's where I would target. And what we see is before price started to return and rest, not surprisingly, it shifted up right here. Why? Because this bar right here has a lot of volume. That's why. And it was an aggressive trader up here. So someone held the line or exited aggressively from their long, saw something they didn't like, decided they were done, thought they could get long lower, whatever the reason is, who knows. But the point is volume, VPOC, shifted way up and price couldn't continue higher. And so as soon as you see that, especially on high volume like that, you're probably looking at a pullback of some kind. It's just a question of where you're going. And that's going to depend on who's dominant on this time frame and the time frames above you. So in this case, I'd be surprised if we get back to here, but I would not be surprised if we get back to wherever they got trapped. So if you look here at this big wave, right, we can see where most of the volume was there. It looks like there was some up here. So let's see where this was. Right there. That is where sellers need to get for this to go any lower. It's actually very close to the green one. So that would be what has to happen for it to be bearish. And so when it pulls back right towards that area and it bounces with a lot of volume, and then you look, and you say, oh, it did get dominant. So at that point, I might be a little bit concerned, but it's still bullish on the higher time frame. And this is the first place they've really had any sellers. And where did those sellers start coming in? Right here. Right? So all buyers have to do is break that, and we're good. So if you want to wait, you know right there where the arrow is, even though it's not dominant yet, you know it's going higher. And so at that point, you're just looking for an entry point, which is probably the star. And then now you've hit your target. And you're probably done with the trade. Because this one, look how big this volume is. And speed trap. So if I can get behind that on a bar that's not purple, like this, well, now I know we've potentially reversed. And this long is potentially trapped. Where are they probably going to go? Right down here. They wiggle around a while. And they don't. Oh, they take all the stops. And then do they go there? Of course. So see how that works? You had to try this twice if you were anxious about it. If you took it here. And here's the reason not to do it, by the way. Something I didn't notice. Look where the dotted line is. It's in my way between me and my target. And it's way closer to my entry than my target. I can't target this and have good risk reward. Look what happens when price gets to that level. They pop. And if you look here, buyers are dominant. And on the higher time frame, buyers are dominant. Sellers have to work way harder than buyers here. Buyers might not get anywhere. It doesn't mean it's a good time to buy. But it's going to be hard to sell this. So where's the best place to sell it? Above that. When? When you have a divergent high. Or a very big wave on the small time frame and a divergent wave on a higher time frame. So here, you just got a wimpy wave here, but it was consolidation. So it's not technically divergent. They try to pull back. They stop all of the longs out that were late. That shouldn't surprise anybody. But look who's dominant. Right? Clearly the buyers are still in charge as long as this doesn't get taken out. But this wave did get taken by this one, right? So what are the buyers going to try to do? Take that liquidity. And if you look, once you've got the triangle, they're now above the dotted line. Here, it was right in your way. So this would have been hard and probably not a good idea to buy, because you just had a dominant wave down and you've got VPOC, developing VPOC, in your way. But then developing VPOC shifts down and price goes higher. It's not moving lower. Where do they go? Right here. They close one bar behind it by like a tick, go a little bit further, and sell off. Now, since they went higher, we can look at volume compared to the last time they made a high, not this one, the last time they made a high, and say, which one has more volume? And in this case, the previous one clearly had way more volume than the high. And so the very last wave to the high was divergent. And like we said before, that creates opportunities for reversals. But in this case, if you shorted that, you've got VPOC right in your way. And that's going to be frustrating because you're going to get this. And sometimes that's going to take your stop. But look at this. Now, your triangle bar is below the dotted line. That one probably comes and breaks through. Okay. And let me see if I can, once we slow down and this starts to move more, we can find the shifts that happen on the triangles. See, when you get a triangle, but volume just chills out and like there's not a lot of dominance, it's just balanced. What happens is you just come down here, you steal this stop, and then you come back up and steal your stop. Sometimes. But if you can get the triangle to occur precisely when volume, developing volume point of control shifts lower like this in the direction of the triangle, that triangle can have immediate effect, success if you have a dominant wave. What you do. Now, once again, they F you, but that's how it goes. Oh, and you put in a divergent low. So look. Low. Lower low. I didn't see this at first. This wave. Oh, I'm wrong. Not a divergent low. Bigger volume at the low. Did the higher time frame have a divergent low? Yeah. Weak low at the higher time frame. Big low at the smaller time frame. What does that mean? It means somebody got stuck down here on a small time frame, probably with leverage. And on the higher time frame, they got stuck because nobody on a higher time frame was interested relative to the ones who bought the last wave up. So it's like a fake out. So divergent on the higher time frame, but dominant and bigger, not divergent. It's going higher than the last one on a smaller time frame. And that usually traps people. So once you get this, basically any low you can buy if there's an aggressive trader. So like all the stars, all the green bars, all the triangles, usually good. And then note, when you get a triangle that gets volume to shift up, you get an immediate lift, right? Whereas if you have a triangle that fires and volume, VPOC doesn't move, they try to pull back to it. Okay, so setup number 2. if you have a flat developing volume point of control like this, it's flat. And this particularly happens when it's fast. So flat, right? And you have tested it and then left it with a pink or a purple bar. I think it's got to be the very first bar that leaves it. So let me back up to, this is where the PMI came out. Let's see if I can find one. So we have to touch the bar. Here we go. Touch the bar, right? Touch the bar. Sorry, I'm moving my foot on my desk, or leg on my desk. It's loud on the microphone. So touch the bar. Touch the bar touches the VPOC. We lift. Oh, and VPOC does not follow, right? And that bar is pink, meaning, again, it's moving due to illiquidity and probably has very low volume compared to the previous bars. So if that happens, normally, if it's balanced, the next move is back to the dotted line or wherever the dotted line was when we left the area. So just like this. That is the normal, and that when that happens, there's nothing to do. It's just pivoting back and forth. Like I said, if it's a triangle and it lifts and the dotted line didn't move, you can also expect it to come back to that area. And if it does so, not a whole lot to do. Here, dotted line touches the bar. We leave the area. The dotted line does not move. This first bar to not touch the line is purple. What should we expect? Price should come back to that level. It does. There's nothing to do. We have a triangle. It's pointing up, but volume shifted down. Probably nothing to do. Doesn't mean it has to come back, but normally it's going to come back to that area. In this case, we got dotted line, pink above. It does not shift. And, oh, is it going to come back? It came back again. Nothing to do. There we go. Dotted line here, touches the bar. Now a bar doesn't touch the dotted line. That bar is pink, and it's got a triangle. Okay. Normally, we're going to get it to pull back and touch that line. If it does, there's nothing to do. If it doesn't, we have a trade opportunity. It does. Nothing to do there. Triangle. Okay, this is the lower odds because it's not purple, but it's okay because this one's purple. So purple followed by triangle, where triangle left the line, and it tries to come back, but instead produces a dot like this. That level, as long as it's not broken, is usually a good place to short. So this. Oh, and it can be broken by price, but not the yellow line on a bullish bar. So this is usually a short. See that? And now we're watching this dotted line, because once it shifts, we should expect a pullback. Sometimes you get the pullback before that because you trapped an aggressive trader and had a really big sell wave on this time frame, but a very weak sell wave on the higher time frame. And when you see that, it's bullish once you beat it. And again, in this case, it's like this. Oh, we can't get volume above it except for on pink bar. We can still be bearish. So let's see if it sets up again. Touches the line. There we go. First one to not touch the line is purple. That's a good sign. Now we have to have it not come back to the line. Oh, volume shifted down. No trade. Probably coming back. In fact, if anything, that's a buy because of this and the heavy selling that we just took over, most likely. We left it with the triangle, so lower odds, but if it doesn't come back and instead it gives us Oh, it's going to come back. So it shifted higher, right? Okay. Triangle left the line without volume shifting. If we don't go back to it, and instead we get a yellow dot, right there. So it tries to come back to the line, but it can't, and we get a yellow dot, and particularly a star or a diamond or some sort of anything with a dot, that's a potential short. We want to look here and make sure we're dominant. And it is dominant short, right? And so we get we take out the low, but you can see that this was divergent. So do we want to stay in that short? Not as soon as we see this, especially when we look at the higher time frame and buyers are in control. It's like, oh, if we can't take this low, I don't want anything to do with it. And I actually took that trade. Okay. Triangle touches the level. The first one after it's pink. Let's see if we can keep going without returning to the dotted line. Nope. Dotted line shifts up. Dotted line shifts down on a triangle. That triangle has other signals. It's probably bearish. And the fact that it shifts with the triangle gives us a short entry. And the stop goes up here. Okay, we left the dotted line. And now we've come back to it. And this one was not purple and not a triangle. It's usually going to mean revert. Mean revert. Again, here, lower low, not divergent. Okay, mean reversion. No triangle, no pink bar, nothing to do with this time frame, with this setup. Okay, first bar that didn't touch the dotted line is pink. You can, it's got a dot, so you might just buy it. Otherwise, wait for a pullback with, this is awfully high, but normally it's the next pullback with a dot. But now it's probably too late. Yeah. Okay, there we go. Oh, no, it's not purple, and this isn't purple. Okay, nothing to do, nothing to do, nothing to do. All right, we left the area. Oh, it doesn't matter. We shifted volume up, so it's still bullish. It's bullish anyway. So once you get this bar leaving the dotted line, if volume now shifts higher, that's bullish. This is just, I mean, look. Bull. Okay, left, and it's pink. But we come right back to it. Nothing to do. Note here you've got a triangle down, but volume shifted up. We can't do anything here. Oh, okay. We left with the purple. Do we get... Nope, we go back to it. Nothing to do. So see how we're just going back and forth whenever that happens? Okay, leaving it with pink. We could just get long here if we think it's dominant buyer. And it looks like it probably is. And that works. Otherwise, you wait for this, and then you get it. Divergent. Yep. Divergent high. Be very careful with buys. Right? So now we've made a lower high. And I'm probably, if I can take this out, I'm looking for shorts. Okay, that touched the line, so nothing to do. Touch, touch, touch. There we go. Oh, but still, it came right back down. So, no long. Okay, first one to leave is pink. Can we get a dot on a pullback? Right there. That would potentially be an entry if you think it's bullish. And it looks pretty bullish. There we go. You get a scalp. Again, these are just scalps. 10 points. Here, there, here, there. Right there. Left the line with the purple bar, and it's a triangle. It just can't come back. Oh, came back. Oh, but look, it shifted down and then shifted down again. That's pretty bearish. See that? So price dropped and volume dropped. And now, and did we have a, no divergent high here. Did we have a divergent high here? Nope. No diversion high. Okay. Not that time. Purple comes back. No, nothing to do here because it's not pink and it's not a triangle. So if this was a triangle, this would be a buy for a scalp. Okay, we shifted up with the triangle, but then we shift down. So that, if it's bearish, it's a short. But I don't know if it's bearish because that's a new high. Oh, is it divergent? It is higher. Is it divergent? Oh, yeah. Okay, so divergent high. And here, divergent high too. So, yes, I'd be selling. And again, the sell doesn't have to come right away. It could come on an aggressive trader. Like that. Oh, did they do it again? Bastards. Yep, one more time. Divergent high. Pink bar, but then we came, volume shifted up. Right? So there, divergent high. Technically, we'd have to take this out to be sure. But if you thought this looked bearish, you could take this. Otherwise, triangle down, purple. If you can get a dot, yeah, right there. That's where, so that would be your first opportunity when they shift volume down, or else right there, the dot. But see how, I mean, they might not have gotten it every single time, but eventually they put in a divergent wave. And here they, what about on the tiny time frame? On the 7 tick, did they have a big one? Yeah, so see how the 7 tick piled in the highs? Look at that. These two are really big. So once you get under this, purple triangle is the first one to leave the dotted line. Oh, it came back to it. Purple. There, triangle, first one that leaves the dotted line. Right there, dot. X, any of those, good. Star, all these are good. And your stop has to go up here. Dot, all these are fine. So just find a place to short, basically. And then the divergent on a higher time frame and piling in at the highs with heavy volume on the smaller time frame. That is a good setup, regardless. And then the other way you can do this often is you draw a line here. We call this trade the super trap or the super tramp. It's got to close above it, and then you can enter right at that level with a 7-point stop, and you're good to go. And you can get massive, literally like 10 to 1. I mean, look at this. 7-point risk from, let's say, 92. So, 9. It's a 60, 70, 80 to 1? Or 8 to 1? No, 10. At least 10 to 1. Yeah, more than 10 to 1. Like 12 to 1. So, a good trade if you have it in the right spot. But all through here, you can do that same dance with the triangles. So, purple bar triangle, left the dotted line. You could probably just short it. If you didn't, and you get a dot, especially if it's got one of those, good to go. First one that leaves the dotted line is purple and or a triangle. Doesn't come back. You get a dot, you can short. You get a dot, you can short. First one that leaves the dotted line is purple. Tries to come back, you get a dot, another short. Dot, another short. First one that leaves the dotted line is purple. Dot. Okay, that one stops. Right, it got over this. But other than that, and then this one right there. I mean, it's no dot, but it's a star. It's good enough. I mean, get your money back there. Now we're pretty far away from it. So I don't think I'd short this. Because really your stop goes up here. That's kind of shitty. And then look, they got dominant off the low. First one that left is a triangle. Dot, short. Dot, short. Dot, dot, dot. Short, 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 short. Right? And look, it's over and over again. Like, shifts down. First one's purple. Oh, it pulls back. Oh, but it didn't get the yellow line over it. Orange bar is probably good enough. Dot. Now again, look how far away you are from the dotted line. Your stop has to go up here. That's no longer a scalp. You don't take that. I don't take that. Plus, divergent compared to this. It's very weak, making a lower low. And I wonder if they, yep, they shoved a bunch of sellers in here at the lows on the smaller time frame. What about the higher time frame? Oh, huge sellers. So this is potentially the low of like the day. Yeah. Yeah, that's massive. See that? Cool, right? That's pretty neat. Anyway, that's a 2-hour little reminder for me of 3 ideas. So it's the, like I said, the diamonds, and then being aware of where the other one right before it was, if you're fighting the trend. Otherwise, getting in on the triangle, particularly if the dotted line shifted with the triangle. Or one thing I didn't mention is if it's positioned at the top for the red or the bottom for the white, if volume shifts against the diamond right before it on that big volume bar, it can be mega good. Same thing for these. So like all the way up and then circle, a ring I call it. That's a good one. If it's followed by a triangle. And then same thing. If this would have had a diamond, then you want it to be the one before the diamond. Let me see if I can find one like that. It's got to shift right before the diamond and be in position. So see how these aren't shifting, even though we get diamonds? It's not bearish. Like this is not a sell because we didn't get any volume up here. We didn't get developing volume up there. This bar had a lot of volume, but most of the volume done up to that point is below us. So we don't want to short into that. We need that dotted line to shift up and then get under it. We want the diamond to show up below here, like that, right? Shifts up and then diamonds below. Probably works with the pink diamonds too, but for sure with the diamonds inside. But look, with the rings, shift up, ring bar, lower. Here's one. Look, it's positioned correctly at the top. Volume shifts up, and then we get the diamond, and there's nothing below us. There's no dotted line below us. That's probably good to go. Oh, no dot. So it needed a pullback. Now it's going to go. I forgot. No dot. Yeah. So if it doesn't have a dot, you got to wait for the pullback because that's just classic, especially to the short side with those diamonds. Let me see if I can find one. So see, this is normally good because you got dotted line shifting down before it. But then on the diamond, we shifted down again. So you must wait for the triangle, which doesn't come. Because we need to get above that with volume. The yellow line. So here we go. Volume moves down. Price. Oh, but they're pink. I don't like that. That one, both more pink. That's not going to work, I bet. Oh, we got a white one. It might be okay. Yeah, that one worked. It does look right other than the pink. We shifted volume down right before it. We got the diamond. And then pink, or triangle up. Shift volume up. That's perfect. Let me see if I can find another one. That's long here. Diamonds. Okay, so see, shifting volume down, but then no triangle, no dot, right? We wait for the pullback. We shifted volume down, but it's pink. So triangle up is avoided. Pink. Oh, we didn't shift volume down. I'm not taking that. I realize it works sometimes, but I'm not going to take those. Okay, and this is not positioned correctly, so that's just going to get trapped probably. Shifted volume up. Shifted volume down on the triangle. That's good. Yeah. And then that's fine too. Flat shifts down on the triangle, not on the diamond. Okay. And then if it's far enough away, you can scalp to it, but don't expect it to go through it. Okay. And so like here, you got it below you, and you'd think that's got to be bullish. But the problem is it is, right? We left the area. We've come back and it's blue. It's bullish, but our target's here. And in this case, you have to put your stop down here. So it's not wrong, and it probably works. Okay, that one's... Oh, no, it stops. But they're not all going to work. That should be very clear. Yeah, see, this again, first one that's left the dotted line, get a dot, go long. It's just a scalp, but they work. And see this, you don't want to take because it did shift down, but it's above you. So you'd need a triangle to get over it. No triangle. Now you got a triangle over it. Now you can, it's pink though. That one's probably better. Yeah. See what I really wanted. Oh, it did shift up. So I want the dotted line to shift up on the pink triangles. That's ideal. And especially if there's a white diamond to the left of it. It doesn't have to be right before it, just in the location here. Anywhere in here is fine. It can chop around all it wants. This guy is stuck. And what I need to happen is to get over this, preferably with a bar that's not pink, like that. And then I need to shift volume up on a triangle. And then you get this. Let's just see what's going on right now. And then I'm going to bed. Oh, cool. We're trading lower. Okay. Nothing to do, really. All right. If you want to get a hold of me, that's the contact info. Redben at Redben Trader on Twitter. Or else if you want to get information about the trading room or the algo, it's for Simon, my coach. It's trade, the letter N, wordperform @gmail.com. All right, guys. Thanks for sticking with me, and I'll see y'all soon.